Welcome to another episode of our Profitable Home Services podcast. This is a podcast where we dig deep into the profit and the cash flow leaks in your business. We're so glad you could join us for this episode. Now, today I don't have a special guest, but I will be talking about the profit first principles. And oh, by the way, this is Diane Gardner, your profit coach. Anyhow, I'm not sure how many of you are familiar with Profit First, so I thought I would start with just some basic background information. Profit First is a book that was written by Mike Michalowicz several years ago now, but it has been a life-changing, transforming book for many businesses all around the world, not just here in the US. In this book, Mike takes principles that work with our human nature and turns them into assets for our business. So with that, let's get started as we talk about Profit First. Probably one of the main things that you'll notice with Profit First is that it takes the accounting formula of sales minus expenses equals profits and turns it upside down. We like to say that sales minus profit equals expenses. So why do we do that? We do that because I firmly believe that no small business owner should have their profit as an afterthought. We don't want the business owners to have profit as a crumb, something that's just left over at the end of the day or the week or the month or even the year. We want your profit to be intentional. We want you to say, I want X amount of profit for this year or a certain percentage of profit for this year. Maybe you want 15% net profit. Maybe you want 25% net profit. And if you look at your current P&L, you might find that you're really only getting a 5% net profit or even a 3% net profit. Well, what does that say for the health of your business? It tells us that your business is not very healthy. You're very close to having to shut that business down if something was to happen and your cash flow was turned off. So by turning it around and saying sales minus profit equals expenses, we're taking that profit first. We're putting it away. We're protecting it. We're putting it in the vault. We're putting it in a safekeeping place. We do that by using the human behavioral aspects and some psychology. When we pull this money out of our main operating account and we hide it away in a safe type account, possibly even in another bank, when we do that, we tend to look at the bank balance that is available in our operating account, or Profit First calls it your OpEx account. We look at that balance and we make our decisions based on that balance, not based on the whole amount. And so by putting our profit away first, we are forced to make better decisions. But we're going with our human psychology that says, hey, I have this much money in the bank, I can make this particular decision. Profit First uses a multi-account bank system. In the book, Mike talks about your 5 main accounts. Well, generally the businesses I work with are between $1 million and $25 million. So I've changed up those accounts a little bit. With my clients, generally speaking, we have a general operating account. We'll have a profit account where we hide away that profit. We guard that very carefully. We'll have a tax account. In that account, we will put money away so that you can easily make your estimated payments and pay any tax that's owed at tax time. There's nothing worse than a business that's generating profit and it's time to make estimated payments and the owner can't come up with the money to make those payments. So we hide that money away as well. I strongly encourage an emergency fund. I think the COVID epidemic taught us some valuable lessons in that if we don't have a couple months operating capital sitting out there, that our business is not fully funded. We don't have enough capital to keep things going if there was a slight hiccup in anything. So we may have an emergency fund out there. A lot of my clients realize that they would like 3 to 6 months worth of operating income put away in their emergency fund. Then we also talk about future growth, future expansion, future hiring, future purchases. It might be a purchase of another truck or a van. How nice would it be if you were able to pay cash for that truck or that van and not have to take a loan out against it? How nice would it be when it comes time to add that next position in your company, if you had the money sitting there and you'd already been transferring money into this future account and know that, yes, I can make that person's salary and I'm not going to stress out about it? How nice would it be that you realize your company is growing and in maybe a year or 2 years time, you're going to outgrow your facility? How nice would it be if we were putting money away today for when that happens tomorrow? So these multi-account bank system comes in very handy. Most of the time, we try to use different banks for some of these accounts. My goal is that if you look at your bank balance on your phone, you do not see the other accounts. You only see your operating account. And if we are working within just that operating account, we're working with a smaller number than we would be otherwise. And I'm going to give you the analogy of going to a restaurant that serves a big platter of food. 9 times out of 10, you don't eat the whole platter's worth of food. You'll have some leftovers. Maybe you'll take them home. Maybe you won't. But how much better could it be for you if that restaurant served your food on a smaller platter? You'd be comfortably full. You wouldn't overeat and you'd be satisfied. Well, we want that same type of thing in your business, to where we are working with a smaller amount because we're just working with what's in that operating account, protecting your owner's profit, protecting your income tax money, protecting your emergency fund, protecting maybe a future growth type account, and there can be others as well. I have some of my clients that like to put money in a cost of goods account so they can always pay their vendors and their suppliers and their subcontractors as well. So it depends on the business. We get a little, changing up what the accounts might be depending on the need for that business. Now we've got these bank accounts set up. We know what they're for, but how are we going to get money into it? Well, in the book, Mike suggests doing your transfers on the 10th and the 25th. I have found that in working with home service businesses, it seems to work better if we make those transfers every Monday morning. It's pretty easy to total up what came in the week before, make our transfer off into our cost of goods sold account so we can cover our materials and other expenses related to the job. Then we do our transfers off into our other accounts as needed for that week. And by doing them every Monday morning, it's easy to calculate that number from the prior week. It keeps it a smaller number than if we were only doing it twice a month or once a month. So it's kind of important, or it isn't kind of, it is very important to get on a regularly scheduled routine of making these transfers. After a while, it starts becoming a game. I wonder how much I get to transfer this week. Our allocations have purposes behind them. Allocations are the percentages or the amount of money that's being transferred into these various bank accounts. If we know that we would like to do something in particular, like maybe hire another position in our business, it makes it so much easier to put that money away. If we have some dreams that we'd like to do with our profit account, it makes it a lot easier to put that money away. One of my coaching members had always wanted to put a swimming pool in her backyard. And so we started her on the Profit First program. And within just a couple quarters, she had put enough money away that they were able to pay cash to have the swimming pool put in her backyard. I myself have been saving up my profits so that we can build a house for cash. We don't want to be in debt. We want to actually pay cash for a brand new house. And so we have been saving for several years, and thank God for Profit First, because if it wasn't for that, I would not have money put away to be able to build this house. That's a big dream. And so big goals, big dreams gives me great purpose to keep putting that money away every Monday morning. When we allow ourselves to see the other bank accounts on a regular basis, it allows us to be tempted. And so we want to eliminate those temptations, as I mentioned before, about potentially setting those other accounts up in various other banks, so that when you do look on your phone, all you see is the main bank account, your operating account or your OPEX account. By pulling those other accounts off to other banks and not setting up the feed where you can access it from your phone, we can eliminate the temptation to say, oh, I've got money in this account, I'll just transfer it in and go ahead and make the decision or the purchase that you want to make out of your OPEX. In a perfect world, as we transfer money out to these other accounts, it does not come back in to pay operating expenses. Now, the one caveat will be money in your income tax account may get transferred back to your OPEX so you can cut the check or make the payment online for your estimated tax payments. Financial health is so important in a business. And by removing the temptation to pull from these other accounts, over time, your business will become more and more and more healthy in a financial sense. People always ask me how to get this program started. There's a lot of challenges to get it going and get it rolling. How do you know how much to put in the various accounts? How do you know how much to transfer each week? These are really great questions. And these are topics that we cover in our Profit Implementer program, where we spend time on digging into your business, doing a Profit First assessment report. In that assessment report, we're able to give you some guidelines and suggestions on how to set up Profit First in your business, how to get it running, how to get it operating. Then I have a template where we can set up your bank accounts and how to track how much is being transferred into each one of them on a weekly basis. Now, remember, we can't jump in and just start transferring large amounts into these accounts. We must start small, and we want to do baby steps. We want to start out at maybe 1 or 2% and baby step our way up so that we can be successful. I never, ever want to set up a business for failure. Always want to set them up for success. And by doing that, we take baby steps, and over time, we can increase those percentages. But here again, in my Profit Implementer coaching program, we go into pretty good detail on how to make that happen so that you understand the implementation and know that you've got somebody right there walking with you, hand in hand, and right there by your side as you start flexing your Profit First muscle. Profit First is a muscle that needs to be exercised just like any other muscle in your body. If we went to the gym and you'd never been to the gym before and you walked over to one of the weight machines, you couldn't put very much weight on that machine because you had not been working up to it. But by learning how to do it correctly and practicing every day or a couple times a week, over time, you would get to where you could put a decent amount of weight on the machine. Well, planning for your profit, making your transfers, all that is the same type of thing. It's a muscle that we need to exercise, and we want to grow it. We'll make it stronger, and eventually you can flex that muscle and say, look at how we're doing. Look at how much healthier our company is. We've identified various profit leaks in our business, and we've been able to plug those holes and retain that profit back in the business, which gives us more cash flow, which then allows us to potentially increase our percentages as we transfer into these various bank accounts. Let me give you a couple stories that come from my different coaching members that have come through my program. We've got a member on the East Coast who owns a roofing company. And when they first came into the program, they have a very healthy top line number, but their bottom line number wasn't as healthy as they wanted it to be. And so we immediately did a Profit First assessment for them. And during that process, they were amazed that they could plan for the net amount of profit that they wanted in their business for the year. And so we helped them start setting up their transfers. They got their bank accounts all set up, and started in with the transfer process. And that has allowed them to have that money they need to purchase new equipment, to take profit distributions to the owners. When we're an owner, we wear two hats. One hat is an employee, and we get a wage or a salary for those actions and for the work that we're doing as in our employee role. Our other hat is the CEO, the owner, the entrepreneur. And Profit First is great this way because it allows you to take your salary as the employee and then take your profit distribution as the CEO or the shareholder, just like any other shareholder would do on a publicly traded company. And so when we have a business that starts making their transfers at the end of a quarter, we do a quarterly profit distribution. Now, sometimes part of that money is used to pay down debt, and other times they're able to take all of the profit. So that is just one real life success story of how they were amazed that they could actually plan up ahead that they wanted to take a certain percentage of profit at the end of the year and started working towards that goal. So in conclusion, I just want to say thank you so much for joining me today, for learning a little bit about Profit First. If you haven't already picked up the book and read it, please plan to do so. I do have a few electronic copies or Kindle type copies available. If somebody is interested, let me know and I'll see how long they last. I'd be first come, first serve on those. It's an amazing book, and it will change the way you run your business or the way you operate your business. It'll change your mindset about money. And I'm so happy to be a mastery level Profit First professional. And that means I'm part of the select group that's at the top tier of Profit First professionals. It's a great place to be. I get to hang out with a lot of amazing coaches and accountants and bookkeepers, and allows me to grow my skills and allows me to share those same growth skills with you guys. So thank you again for joining me on this episode, and we're going to call this a wrap for this episode of our Profitable Home Services podcast. Remember, it's not how much you make, it's how much you keep. It's all about profit, cash flow, bottom line dollar. Hey, if you'd like a free digital copy of my book, Your Path to Profits, and you can see it right there behind my head, that blue book, we'd love to give you a copy. And in this book, I share 9 profit boosting tactics that will transform your home service business. To pick up your free copy, head over to Your Path to Profit book. Let me start over. Head on over to yourpathtoprofitsbook.com and claim your free copy. Thank you again for joining me on this episode.